Today, we're diving into something that's basically a pulse check for the entire U.S. healthcare industry. And believe it or not, it all comes down to one company's upcoming earnings report, UnitedHealth Group.
So you might be asking, why? Why does one company's financial report matter so much? Well, it's because this company is just massive. It's woven into pretty much every single part of the healthcare system. So when we look at their performance, we're not just getting a story about one business, we're getting a snapshot of the entire industry's health.
And to really put that into perspective, look at this number. We're talking about a projected $5.1 trillion in total U.S. healthcare spending for 2025. In that massive playground, UnitedHealth, or UNH as you'll see it called, is an absolute giant.
So let's set the stage here. We're looking at a corporate giant, for sure. But it's a giant that's been facing some pretty serious headwinds this year.
Yeah, see, UNH isn't just one single company. It's really a two-part behemoth. On one side, you've got UnitedHealthcare, the massive insurance arm that probably a lot of you are familiar with. It serves over 50 million people. But then there's Optum. This is their fast-growing, incredibly powerful health services, tech, and pharmacy benefits arm. It touches everything from your doctor's visit to the prescription you pick up.
But, despite its massive size, 2025 has been a really bumpy ride. For investors, it's been tough. The stock is down about 10% so far this year. That makes this upcoming earnings report a really high-stakes moment. So what's been going on to cause all this?
All right, let's unpack that a bit. To get why everyone's watching so closely, you have to look at the key events that have shaped UnitedHealth's year so far.
I mean, look at this timeline. The year kicked off with a ton of optimism, talking about unprecedented growth. Then, bam! February hits, and a massive cyber attack on its Change Healthcare unit just rocks the system. Fast forward to mid-year, and you've got a CEO change, with the former CEO Stephen Hemsley returning. All of that drama leads us right here to the Q3 earnings showdown on October 28th.
So you can see it's really a perfect storm of challenges. You've got the fallout from that cyber attack, which is costing hundreds of millions to fix. Then there are regulatory headwinds with proposed Medicare rate cuts hitting a key part of their business. On top of that, just like everywhere else, rising costs. Inflation is driving up prices for drugs and hospital stays. And to top it all off, more people are just seeking care now post-pandemic. It's a battle on multiple fronts.
Okay, so with all that pressure, what are the key numbers we need to be looking for? What exactly will Wall Street be scrutinizing in this report?
All right, analysts are really zeroing in on three key things here. First, revenue. It's actually expected to grow by about 12%, which sounds great, but the real drama is in the next two. Adjusted earnings per share, or EPS, is expected to take a huge hit, down over 60%, mostly because of some one-off costs. And then there's this thing called the medical loss ratio, which is climbing, and that one is super important.
So what is this medical loss ratio, or MLR? Honestly, this is the make or break number for any health insurer. Think of it like this. It's the percentage of every premium dollar you pay that the insurance company actually spends on medical care for its members. The higher that percentage, the lower their profit margin. It's that simple. And you can see the pressure right here in this chart. Last year, their MLR was around 84.4%. Now, the estimate is for it to jump all the way to 90.7%. That is a huge leap, and every single one of those percentage points directly squeezes their profitability.
And here's why Wall Street obsesses over this. Every single 1% swing in that medical loss ratio impacts their earnings per share by about 15 cents. So even a tiny miss or beat on this number can have a really meaningful impact on the bottom line. You can bet everyone is going to be watching this number like a hawk.
Okay, so amidst all these challenges on the insurance side, UnitedHealth has a powerful ace up its sleeve, and that ace is named Optum, their incredible growth engine.
So yeah, if you look at the whole company, the insurance arm, UnitedHealthcare, is still the bigger piece of the pie, about 69%. But Optum is the undisputed growth engine. We're talking about it making up almost a third of the company's revenue now, and it's expected to bring in something like $35 billion this quarter alone. That's huge.
And Optum's strength is, well, it's pretty incredible. They're using AI to cut down on claims denials, saving millions. They're huge in home-based care, with 100 million patient interactions a year. They handle 1.4 times billion prescriptions annually, and they're constantly buying up other companies to expand. What they're doing is building this whole ecosystem. They own the tech, the pharmacy, the doctor's offices, all of it.
That control is what could deliver a really positive surprise for Wall Street.
Okay, so this all leads us to the big question. When the numbers drop, what's it going to be? A beat or a miss? Now, history is on their side. UnitedHealth has a pretty amazing track record, beating Wall Street's expectations 75% of the time over the last 2 years. But you know what they say, past performance is no guarantee of future results, especially in a year as crazy as this one has been.
So it really boils down to one of two outcomes. You've got the bull case. UNH beats on revenue and earnings. That super important MLR number comes in lower than feared, and they raise their guidance for the rest of the year. If that happens, the stock could see a really nice rebound. Then there's the bear case. They miss on earnings because costs are too high, the MLR is worse than expected, and their guidance for the future sounds cautious. That could confirm investors' worst fears and send the stock sliding even further.
And make no mistake, the stakes are high. Looking at how the stock has moved after past earnings reports, we can expect a pretty significant swing. We're talking an average of 4%, no matter which way it goes.
So, will this report be the big turning point for UnitedHealth? Or is it just another plot twist in what has been a year full of surprises? The report on October 28th will give us the answer. And it's an answer that tells us a whole lot, not just about one company, but about the health of an entire industry. Thanks for joining me.